Morning all. How are we all doing? Morning Ladder, morning Stevie, morning Diamond. Where should we start this morning? News, I guess. So we had the news come out for CPI overnight for New Zealand dollar and Aussie dollar. Morning Shroud, morning Frank. Increases across the board, inflation going up. So inflation is a a very tricky statistic. And from a morning, Adrian Freeman. Evening from Aussie, even Adrian. Your interest rates have gone up, mate. That was a really bad Australian accent. Yeah, it's a double-edged sword. Inflation. Basically, with when we get inflation going up, it tends to drive a currency higher. The reason it drives a currency higher is because when inflation goes up, the central banks usually have to increase interest rates. When interest rates go up, that makes the currency more attractive to investment, which makes the currency rise. So the higher the interest rate, the more you get for your money, the more money flows into that currency. So what we tend to see is inflation obviously is really bad for our economy. It's bad for our pocket. It creates recession. It does all sorts of bad things. But when it goes up, you quite often get a pump in the currency because the market is now anticipating a higher interest rate rise. So they are buying into the currency now because they expect it to rise because there'll be more investment. So while it is actually a negative from an economic perspective, it's a positive from a Forex perspective. So it's quite difficult when that news comes out to actually determine whether you're going to get a positive or a negative response. And often it will be dependent on how high interest rates are at the time of the increase and whether they've been going up quickly at the time of the increase. So although we had an increase across the board for Aussie and New Zealand, you'll see that obviously the Aussie pairs have all gone mental and hit ADRs, most of them. But the New Zealand pairs didn't, although they had the same impact. It went up. But it wasn't as big an increase. So it's difficult to read into, and quite often you'll find the inflation figures will be a very short-term move, and then they will get retraced. So with all of these today, there is a good fade opportunity. I'm in short on the Aussie New Zealand. I got in at 150. The EA got me into it. I didn't get into it. The EA did it for me because I've got the EA set up just to short Aussie New Zealand when it's extended on the hourly, which it is. So I'm short on that. Look at my entry. Straight on resistance. Well, potential resistance, which will be support. But we've got a huge propulsion move on the news, and obviously we know propulsion moves tend to get either completely A-shaped recovery done, not interested, or they tend to act as a target for buyers to add to the positions. So either way, I'm looking for a fade on these Aussie moves. So we had that overnight. Yesterday, obviously, we had all the PMIs coming out, which, as we know, shut the market up a little bit, not greatly. Today we've got the German IFO climate this morning, and then the main thing obviously is CAD rates. So today is the big day for the CAD. Interest rates going up to 4.5%, we expect. And then we've got the CAD press conference after. So this is where we tend to get the most impact. So the interest rates, if they come out as expected, we will get some kind of movement. But that movement typically won't be potentially continued until the press conference, because what the market is actually interested in is we were expecting 4.5. That's what we've been pricing in. You've given us 4.5 or whatever it may be. Thanks very much. What are you doing next? Because what you're doing next will depend on whether or not we're going to buy or we're going to sell you. So that's the important bit. And we'll be looking for the BOC to give us some indication as to their monetary policy moving forward. So 4 o'clock really is when you're going to see potentially the market start to shake up after that. However, if that comes out as a 4.25 or a 4.75 or a 4.65 or something like that, it's going to go nuts. Obviously, if it comes out higher than expected, we're going to get a massive pump. If it comes out lower than expected, we're going to get a dump because the market's already priced in 4.5. And if it doesn't get 4.5, it's going to be gross. And it'll be like, why didn't you tell me I should have put more money into you? Or hang on a minute, I put all my money into you. Why are you not giving me what I wanted? We're coming out. So one of those two things will happen if we don't get an as expected result. Swiss franc being a prime example. Yeah. It was that one, wasn't it? Was it that one? I think it was that one. November? Was that when they did it? Yeah, I think it was. So this is the Swiss National Bank going, fooled you, we're not going to go 0.0, we're going to go 0.5. What? Bang. Everybody piled everything they had into the Swiss franc and everything collapsed against the Swiss franc because they were expecting not to get any interest on their payments. And they came out and said, we'll give you 0.5%. All right, yeah, we'll have some of that. And that's what happens. So that's the difference of a inflation change. That's what impact it has. I think it was that spike. If it wasn't that spike, it was a spike of that sort of nature. So that's what we've got coming up this afternoon for the Bank of Canada. Obviously, BOC at the minute, we've got 4.25. It went up by 0.5% last time. We're going 0.25% this time. So the forecast is from 4.25 to 4.5. So they're slowing the rates down, as everybody seems to be at the moment. We're all going down to 0.25%. They're doing 0.25%. We're not, and neither is Euro, I don't think. Japan never does anything. New Zealand went 0 last time. They're the first one to actually not increase their interest rates. So we would expect the 0.25 to be hit and go to 4.5, but there is a possibility of that. Inflation came down last time, so you would expect them actually not to be aggressive on the interest rates. So I don't think we'll get anything unusual out of the CAD this afternoon. It should be kind of business as normal, I think, is what we can expect on that. So so that's news. That's all we got today. It's a bank holiday in Australia today. So that's why people are up in Australia. Adrian, not going to go to work. Morning, Sancho. So overnight news. Obviously, we've had obviously mainly Australian. There's nothing else here. It's all Aussie last night. Aussie and New Zealand. So obviously the fundamentals have been updated on the website to reflect those, and the biases haven't changed greatly across those pairs because it's not really an unexpected change. So DAX is open. Push up on the DAX this morning, so we'll have a look at that. Oh, that's tomorrow, is it, Adrian, the bank holiday? Yeah, I suppose it's still night, isn't it, for you? It's very difficult to my little head to figure out time zones, especially when you're on the other side of the world. A bit of a rejection on the DAX this morning. Let's just have a quick look at the DAX and what happened yesterday. So again, yesterday on the DAX, another rejection of the lows, push down, push back up again. So we had obviously, I was expecting this day to turn into a bit of a pullback. We didn't get it. We got an inside bar the following day. So that's your candle with the inside bar, which was the bullish one. And then we pushed up into the highs, rejected them, still bullish. Yesterday, we tried to push back down again. The bears tried to take control, didn't manage it. The bulls tried to push out for a new high, didn't manage it. They did get a new high, but they didn't manage to close higher. And this morning, obviously, all we've done is push down, and he's opened up and pushed down and rejected so far. So we're stuck in contraction. We're in an inside bar. This is the current control candle. Until we break out of that control candle, significantly. We've got no directional bias at the moment. So follow the money, basically, wherever they go, which is the purpose of the opening range breakout. I don't know which way it's going. Get on board whichever way it goes, basically. So I'm expecting really a little bit more bearish action off of this 12-day run that we had, just as a pullback, really, but it doesn't seem to be happening at the moment. So looking at intraday, where we're potentially going, we've got obviously yesterday's high here. That's the obvious spot to aim for at the moment, which is there. And obviously we've got that high just before the close, which was put in. We've got other highs around there as well. So previous day's high is somewhere around there. So if we're going long, that's where I'd expect to get to. Excluding that, obviously, is a 125 ADR hit all the way up here to come back up to these highs. So if we're going long, we should be watching this propulsion gap and the highs of yesterday and the previous day. If we're going short, yesterday's low is the initial target. And then again, it's the same thing. We've either got a hit yesterday's high or low as targets, or it's 125 ADR. So we're either going to have a big day or we're going to hover around. So we'll see where we go at the open. Bullish open, but not very volatile, is it, this morning? The FTSE's, what's the FTSE doing? FTSE's open bearish at the moment. So we might get a pullback on this. You've got a minute left. If you're taking the opening range break of the 5, that's it. So we'll see what happens with those. So yesterday, I didn't manage to bank anything yesterday. Well, I did. I banked $180, not a lot. So yeah, difficult day yesterday. I had a pretty good day on the FX side of things. Where are we? 24th. So banked euro pound. Go to the Audi so we can see what's going on. So back to euro pound yesterday. The DAX, I had a little bit of luck on the short at the opening range. Scaled out one on the CAD Swiss. Pound US dollar, took that short off. And then the NASDAQ happened. So yesterday afternoon, I won't put all these trades on there. Well, I can do, couldn't I? Can have a look at them all. Let's put them on the NASDAQ chart and see them easier then. But yeah, yesterday NASDAQ was just hideous. These are sell stops. So there's another one there. So got totally destroyed in the NASDAQ yesterday. So we opened, there's your 15-minute opening range. There's your 30-minute opening range. And literally all we did was we pushed up out the 15-minute opening range. See, I took a little profit there on pretty much a break-even stop. And then all we did for the entire session was chop. So you can see I turned the EA off here. After an hour and a half of this, I just said, nah, not interested anymore. So we just got chopped to death yesterday. They didn't actually go anywhere, and they literally held that move until the end of the day. And then we had a pop at the end of the day. So awful day. Absolutely no direction. And I was expecting, because we were entering to earnings fortnight, we were going to get a decent move, but we just didn't get anything yesterday. There's some kind of confusion with some stocks being suspended at the NASDAQ. Not the NASDAQ, at one of the exchanges. I think it was the CME, I can't remember. Some stocks had very, very big price movements at the open, so they suspended them. So I don't know if this is something to do with that, whether it shot the market into what the hell's going on and they all stopped trading or something. I don't know. Maybe they turned the algos off. I'm not sure, but yeah, horrible session. So lost a bit on that. Still positive there in the end, but not good. And this morning, Aussie New Zealand, I took a loss on that one this morning. That's all I've traded this morning. And a DAX. What's that DAX buy? Oh, idiot. Of course. Yeah. So that's my mistake. Lesson there. So the EA, the opening range breakout EA, automatically cancels off your pending orders at end of day. Yeah. What I did yesterday, if you were in here in the live room yesterday, was I disabled auto trading yesterday because I wanted to stop trading the NASDAQ. And obviously, because I did that, the EA didn't cancel off my 15-minute opening range break. That's the 15-minute opening range. So it took a long right end of day yesterday, and obviously stopped me out. So lesson there. Check your pending orders before the end of the day. That's my mistake. Silly. I was like, what? Why would I be trading the NASDAQ at like 11 o'clock at night? The DAX, rather. Anyway, but Aussie, yeah. So Aussie, yesterday, if you remember, I got on this Aussie short. So we had a big, strong push up on the Aussie. And I said, basically, I'm going to go short on this. I'm waiting to try and get into short on this, but couldn't get in. It was, I had a stop loss on it, which got triggered basically on the news. It actually got triggered, again, broker trigger. It's spread. Look. So that's where they opened. They spread the gap by 25 pips, stopped me out. Price never got anywhere near it. This is overnight. If you trade the New Zealand dollar and you hold anything overnight with a stop loss in, that's going to happen all the time. They spread the spread on the NASDAQ. Sorry, I keep got the NASDAQ on my head. The spread on the New Zealand dollar, I have seen move to 3/4 of an ADR at the swap. Yeah, they just literally spread the hell out of it. There's no liquidity in it because you're switching sessions, and you're switching from a high volume session to a very low volume session. There's no liquidity in the market at that time, and it just spreads like crazy. So I got stopped out on it. It would have stopped out anyway because obviously the New Zealand Aussie New Zealand pushed because of the Aussie. So I'm back in again on that this morning because obviously we got an hourly RSI extension. So I'm in on the 5-minute reversal alert on that one, which was here. But obviously that got invalidated because it's pushed up to 200 ADR this morning. So that's me where I am. Your DAX 5-minute opening range and 10-minute opening ranges are in. 5-minute we're sitting inside that at the moment. So big strong bull move. But it's a big strong bull move straight up into a big strong bear move. This was last night, so that's where I got in last night accidentally. So that's not the end of session last night when they had that big rally on all the indices. Obviously, some kind of big stock purchase went in at the end of the day. That will be to do with earnings. So one thing you need to be aware of in earnings fortnight, which happens a lot, is these AMC releases after market close. These are meant to these are coming out pre-market, which means basically they're coming out before 9:30 a.m. before the opening bell in New York. The aftermarkets are meant to happen after the closing bell, but I've seen this loads of times. They don't. They actually get released before, but right at the end of the session. Or if that's not happening, what you'd get is a lot of speculative purchases. So people get wind that Microsoft earnings are going to come out positive or something like that. And what they would do is before end of session, they will pump a load of purchases into the stock. So you saw last night that DAX movement there is at 11. That's the very end of the session. If you look at the NASDAQ, yeah, last night as well, pop. So we had 15 minutes from 10.50 until 11, yeah, which is basically just before the end of the session, where we get this massive spike. So this is speculative orders going in ahead of either on earnings release or speculative ahead of earnings release. So you get this a lot in earnings season, what they call the end of day pump or end of day sell off. So just be aware of it. And make sure you cancel your pending orders, as I discovered last night. I wonder why I'd lost $250. I was looking at my P&L this morning. I was like, I'm sure I only had $150 stop on that. How can I get stopped out for 250? I just put it down to slippage. I didn't even look at my P&L. I just thought I got slipped on it on the Aussie New Zealand, but I didn't. They honoured that stop. Positive swap as well on the Aussie New Zealand, which is nice for a change. Right, so that's where I am at the moment. I've got Aussie New Zealand short, CAD Swiss short, Euro Pound long, Pound US short, New Zealand Yen short, and US CAD long. My New Zealand Yen is I haven't got the EA trading this for me. So obviously I use the market reversal alerts EA to get me into everything and scale into all of my positions. That's not running at the moment on the New Zealand dollar yen. This is a pure speculative short, which I put in place because of where we are on the New Zealand dollar yen. Yeah. So this New Zealand dollar yen is at a very, very nice multiple hit resistance. And we got there again yesterday. So the trade is literally a stop loss trade. I'm playing this range, assuming that this range is going to continue. You can see my stop is above that high. If this pushes up, I do not want to be in it as a position trade. I love it short. I love everything short against the yen at the moment, but not enough to actually get into a position on it because a lot of these other yen pairs off of that move have returned to origin. This one hasn't got there. So if you look at a lot of these other yens, Aussie yen, yeah, there's the move, there's the return to origin, and it's gone beyond. Obviously, that's gone beyond on the news. Your CAD yen, that's there. That hasn't quite got there, but it did get up into that resistance. Your Swiss yen, that hasn't got there because the Swiss has been massively weak. Euro yen, again, it's heading up towards it at the moment. The pound yen, heading up towards it, hasn't got there. Us, where we are at the moment, and the US dollar yen, which again hasn't. So a lot of these pairs that haven't got there yet have tapped into that resistance and then bounced, or they've slammed through and got there depending on the strength. So when you look at the New Zealand dollar yen, if I come out a little bit further, yeah, we haven't even got to that pre-market level yet, let alone returning to origin. And we've just had inflation go up. So the trade idea literally was, I'm going speculative short on negative inflation numbers, which I would expect to drive this down. We got positive inflation numbers and it hasn't gone anywhere. So today, this is either going to react on Japanese strength or I'm going to get stopped out. Either way, I don't want to hold it as a position trade, but I still like it. And I like it as a, it's got legs, I would say at least down to somewhere there, but that's not going to happen today, is it? Obviously, that's a multi-day move. So I will monitor that, but I'm not using the EA. I'm not going to scale into these yens. Not brave enough at the moment. Right. So that's the news covered. Bias hasn't changed on anything at the moment. So these are your top sells and top buys. Pound US dollar is still the top sell. Pound New Zealand still massively strong. The Aussies are still all sells from a fundamental perspective at the moment. Not all of them, but certainly the Aussie US and the Aussie New Zealand. Euro New Zealand is a good sell. Pound odd and Euro US, and obviously the buys, as you can see, a lot of yens in there on the buys, so up to you on the yens, but I'm not convinced on those yens. So we've got a lot of ADR hits today, so any of these you can take as fades today. We've got some weeklies hit as well. We're on Wednesday and we've already got the weeklies hit, but as you'll see, most of these are Australian dollar. In fact, all the all the weeklies are Australian dollar. Yeah, they're all Australian dollar, aren't they? Yeah. Off the back of that news. So when you look at the buyer scorecard to do with these Australian dollar sells, Aussie New Zealand and Aussie US, if you look at them, they're -6 and -8. Half of that is COT. Yeah. And don't forget with COT, you are 1 week behind because you're looking at a historical report. And the historical report is from the Tuesday of the week. So by the time you get that on a Friday, you're looking at Tuesday's figures. By the time you're acting on it, you're 1 week behind, right? So today is Wednesday. The COT report that comes out on Friday this week will not include the CPI figures for Australia and New Zealand. We'll get those next week. Yeah. So when you're looking at COT as being a large portion of that sell, we're not going to know the impact of the CPI figures on the commitment of traders until Friday next week. So just bear in mind, there has been quite a large shift in the inflation figures for the Australian dollar. So when we're looking at it, yeah, we've had half percent increase on the same quarter last year, which has driven that up to 7.8. So this is going to have an impact on this. Last time they changed their interest rates by 0.25%, it's obviously not having a positive impact. So that, I would suggest, might indicate that the next rate increase will be something like 0.35 or 0.5, because they go up in 0.35s for some unknown reason. I don't know why. So that will be bullish Australian dollar, but we're not going to see the impact of that until next Friday. So looking at all these Aussies, short term, there's really good fade opportunities. So where we are with all these ADR extensions and these weekly extensions is obviously up in the 125s, 150s. This is the news, the CPI. Yeah. And you've got another propulsion gap there on this one, which obviously was respected. But so that is where I'd expect us to trade back into. But potentially we could be looking at a strong Australian dollar now moving forward, because they're quite possibly going to increase their interest rates stronger than they have in the past. So Aussie dollar Swiss up at 100 ADR, fade back down into that area. Aussie New Zealand is the one that I'm in. It's the biggest propulsion gap because we had a lower than expected New Zealand dollar. It was still positive, but it wasn't as big as the Australian version. So obviously this has got a lot stronger, which is why you get the bigger movement on that one. And then the Aussie US, which again got a nice little fade opportunity. So these are all M5 reversal alerts at ADR there. So there's your entry, and fade it back into, depending how brave you're feeling, one of those two propulsion gaps. That's yesterday's high. So that to me would be the obvious spot for a bounce. Yeah. So you got a nice distance on that, for example. So entries there, got 50 odd pips. If you want to use a stop, look at it at 16, nothing. So there's your Aussie US. Your Euro odd obviously will be to the downside. So the Euros come down against the Australian CAD. Euros odd. Euros come down against the Australian dollar. So again, ADR hit to the downside. Reverse alert hasn't triggered on that one yet. We're just accumulating. And then you got your pound odd, which will have come down again as well. You've had your ADR 125 and your reversal alert there. Again, propulsion, that I would ignore there. That's not a propulsion gap, because well, it's a messy one. That is. A propulsion gap needs an accumulation that breaks, where the propulsion candle breaks the low or the high of the accumulation, which it did, which is why you've got that. But it didn't actually break that low there until it got here, and that's where it went into balance. So there's a question mark over that one. That one, however, is a very big propulsion gap. So if you're going to long this one, be careful, but that's where I'd aim. And again, yesterday's low. is where potentially I would look for some kind of resistance if it's going to work. So with all of these, when you get ADR hits off of fundamental news, sometimes they work, sometimes they don't. When they do work, however, they tend to work very quick like that, because what this is a knee-jerk reaction, which in hindsight trading then becomes actually it's not as strong as we thought. What happens is a lot of banks and institutions will go long on it. They'll drive it long because that's the way they want it to go. If they don't get any other banks and institutions jumping on board, you get an accumulation. They will assume that move hasn't worked, and then they'll start to scale out of it like you would take the money. And as you take the money, you become a seller, you entice sellers in, and then that starts the sell move, which means this is why we get those A-shaped recoveries and those V-shaped recovery patterns that we see all the time. Yeah. There's no one left to jump on board with them, so they get off. And as they get off, everybody gets on with them on the profit take, and that's why you get these V-shapes. And obviously A-shapes in the opposite direction. We had one this week, didn't we? It was on the yen, wasn't it? Yeah. Yeah. Bank of Japan, speculative move. Not enough interested participants. Right, it's not working, guys, jump off. Everybody jumps on the fade. And that's why we get that. And all you do is you return to origin, you carry on as normal. Some call it manipulation. Call it what you like. It's basically a move that was not able to be sustained by the banks. Why? Because they ran straight into the sellers who sold there and added there because they weren't interested in going long. So they just drove the price back down again. Right. So ADRs, loads of them. Weeklies, Aussie, it's still the same stuff. So if you look at them all on an hourly, Aussie dollar CAD, start its weekly. There's Monday. That's where we are. We're up at 175 pips. Sorry, the weekly's down there. So up at 190 odd from a 185. Aussie dollar Swiss. Again, nice fade opportunity from there. Yeah, pull back down again. Aussie dollar New Zealand dollar, which is the one that I'm in. And we got the euro odd. So it's all odd again. It's the same stuff. It's the Australian dollar. RSIs, as you would imagine, dominated by the Australian dollar. I haven't watched the DAX. Not paying attention this morning. I'm short the DAX. Not paying attention to what's going on. Got the trailer on at 200. It's okay. Stop seemed very wide this morning. Yeah, no, that's right, isn't it? 288. Can't calculate. 288 plus 10%. 316. 400. Oh, that's why. Yeah, okay. I'm using 400 pip stop, fixed pips. That's why. I was like, that doesn't look like 110% of the opening range. It's because I'm not using 110%. I'm using 40-point stop. EA's garbage in, garbage out. Right. So RSIs. Let's have a quick look at those. Morning, Seymour. Then we'll go through the intraday sentiment. So I don't. This is going to be pretty quick, isn't it? Aussie CAD, a RSI extension to the upside. Aussie Swiss, RSI extension to the upside. 4-hour RSI extension to the upside. Yeah. So again, all these. This is the 4-hour RSIs extended above 75. These are the hourlies, all extended above 80. Virtually all of them. Euro odd below 25s on 4-hour and hourly. Pound odd below 20s and 15. So the only one that isn't normal, we'll look at this euro pound, and then we'll cover all the Aussies. So euro pound on the hourly, you missed it. It's already gone. So there's your 5-minute reverse alert. You've already missed it. The move, it's dropped. So that was extended on the hourly. Sorry, 4 hour hourly. That was extended on the hourly up there. I'm long on this one, so I'm waiting for this. As I said yesterday, I got out of, you can see all my longs here that I've been getting out of. I'm waiting for it to come back down into here to add to this position, with the target obviously up at those highs. If it comes down, if it just goes, that's absolutely fine, because that goes into profit. If it comes down, I can average in to get out on the next pump. But obviously this is the peak formation. There's your market structure. So potentially this could be the low of that part of the structure, but I would anticipate it coming a little bit deeper. But it did make a new high. So the actual market structure proper on this is that now. I was trying to go there. It's there. So yeah. So if you stick a fib on that one, you'll see that the retracement back into the propulsion gap is going to be 61.8. So that's where I would expect it to come back down to 61.8, retest this area. It may get down to here and bounce off the 50. But like I said, equally, it could just go from here. We've had the 38 retracement. Yeah. So we've had a shallow retracement on it. So it might go, but we'll see. So like that one. I'm already in it though, so I'm not going to take the mean reversion. Obviously, I'm taking it the other way. So looking at all of these, so with all of these RSI extensions and ADR extensions, what we're really looking for is to see if there's any support and resistance around that can help us out. So I'm going to whiz through all the Aussies basically, and we'll have a look at them on a sort of a larger time frame. So Aussie dollar CAD, that is your high of last year, is it? Yeah, so that is the high of the year last year. So that's last year's high. Highly likely we're going to find some limit orders up there. And we'll probably get a reaction for a couple of days off of that if we get there. So Aussie CAD, obviously, we are very extended. We've hit 125 ADR. We're very, we're not far away from the yearly high. That's at 150 ADR. But as you can see, the sellers are already starting to pile in on this. So your choice is you wait for it to hit there, see some kind of price action reaction. So when we get up there, drop down to M5, wait for the reversal alert to go in and then get in, or you can take the reversal alert now, which is a nice M pattern, and obviously play it down from here. And if it pushes up, and again, it's not necessarily going to hit that, the limit orders will be placed around the area. Depending on where it actually triggers, you could take a position there and a second position there, which is roughly half an ADR away, and try and scale into it. But that looks like a very nice level we've got coming up. That's a big historic level up there. We are also at a round number here. So if I let's grab this line here. Yeah, 95. That is your big round number. So we've got big round number and annual resistance. So good area to short that from, Aussie CAD. Aussie Swiss, we're running straight into resistance. So again, this is a resistive area. We pulled back, acted as support, came back down again, went into a balance, acted as support, came back down, acted as resistance, pushed back down again. This is our first retest of that area since we pulled down. So it's the first retest this year of that one. So that's not a bad looking area. Again, 100 ADR, M5 reverse alert has already gone in. It's all starting to come undone. So this one's obviously very extended as well from a weekly perspective. We've hit the weekly range on this one as well. Extended on the hourly, extended on the 4 hourly. Perfect, looks good. So it's good for a short as well. Good level coming up. Yen's, I don't know about the yen. What's going on with the Aussie's got nothing to do with the yen. If the yen powers up, that's coming down regardless. So your decision here isn't, do I want to fade the Aussie dollar? Your decision is, do I think the yen's going to power up soon? And this is one of the ones, as I say, that has actually managed to do that return to origin and completely recover that yen move. So, you know, this sort of movement that we're seeing from the yen is becoming more and more frequent. So I just want to be on that side of it when it happens. Aussie New Zealand, I'm in. We've just broken above that resistance. Next resistance is up here. So push down into there, bounced, accumulated, dropped, turned resistance, push down. That's your next level. So if this is not a liquidity run, drop and fade into here, and we're going to accumulate and push, that's where I'd expect to get the next resistance, which is 1104. And that will be roughly just over what it's about 1.25 ADR. So by the time we get there, I would expect to have 3 positions on, ready to fade it back into the gap, assuming obviously the gap doesn't do it today. Aussie dollar, US dollar, coming up into resistance, potentially there. So again, resistance, came back down, accumulation, support, resistance, support. Nah, nothing much there. There's a bit of a hit there, but taps that area again. So it's reacted many times at this level. So again, you know, the market will be watching for areas. If you look at this whole thing on a volume profile, which is a volume profile basically produces the bell curve for the instrument, you will find a bulge here. There'll be a bulge there, which is an area of interest, which is what they call an area of balance, which is an area where we're happy to conduct price, or we are happy to start price discovery, which is movement away from that area. But either way, you'll find a large volume there. When we get there, you tend to find orders there, limit orders placed. So that's why support resistance works. So that's a good area coming up. Not quite there yet, and it's already reacting. So, you know, with all of these, they're either going to just fade today and then have another run potentially at them, at those levels, or you wait. It's entirely up to you, or you scale in, depending if you're position trading or you're using a stop. If you're using a stop, you know, you can get in now, stop above that level, wait for it to come back down. It's a bit of a big stop though. Euro odd. We've got a nice level coming up down here. So it's that one to... So 150 ADR, I would say, is a good level to start looking for longs on Euro odd if we get down there. Again, we need this Australian dollar to power up and carry on today. DAX is pulling back. It's too short on the DAX now, so I've taken an add-on position. So market structure, potentially looking to pull back into there. Oops. So yeah, Euro odd, like that one as well, but only really when we get down there. I'm long the Euro. I really like the Euro. Lagarde is talking the Euro up very, very nicely at the moment. And as you can see, obviously Euro odd is a long-term long. So we're just a little bit deeper at the moment than we have been previously, because the Aussie dollar has been very weak and it's starting to find its legs a little bit now. Finally, which has taken a while. And the other one we've got pound odd, was it? Yeah, pound odd is the other extension. So this is absolutely exhausted. So if we go back on the 4-hour chart and we look at this level, excluding Liz Truss's stupidity, we've only hit this level once in the last year or so. Yeah, where we got that huge pullback. That was Liz Truss. So you ignore that. Liz Truss, Bank of England. We hit it there. Big bounce, multi-day bounce. We're hitting it here. Multi-day bounce. The situation with the pound is different at the moment. The pound is a lot weaker than it was previously. However, for RSI to get down there, there is an awful lot of relative sell strength in the market at the minute, which means there are a lot of people short sitting on an awful lot of money, and they will want to take that off on the first signs of it starting to disappear from their P&L. So imagine watching your P&L being hugely in profit, and then all of a sudden that number shrinking and shrinking and shrinking, like every other human being in the world that gets paid in commission in a bank. They're sitting there going, if I don't get out of this now, I'm just going to lose more commission, and they will start to exit those positions. Yeah, so there's been nothing but selling now for 4 days. There is a profit take due. What that profit take move will be and where it will get to, you don't know. Obviously, an ADR hit to the upside today is quite possibly on the cards if this is going to be a V-shaped recovery fade. It's not a very clean V, though, is it? More like a U. But obviously, this could pull back a lot higher when you look at it on the higher time frames. We've got a propulsion gap up there that hasn't been tested yet. We've got that one there. We've got that one there that hasn't been tested either. So 175 ADR, and obviously ADR today, those are very credible targets on a pullback if the continuation short is going to carry on. Yeah. So go and look at the previous times we've been down at these sorts of levels. Hourly, look. Yeah, we don't get here often. When we do get here, we have a pullback. Yeah, so profit take. Sellers have got to get out their positions. When they get out their positions, they become buyers. When they become buyers, they produce a buying frenzy. When a buying frenzy starts, we get a rally. That's literally all that's happening under the hood. Yeah, we sell and sell and sell and sell, and we exit our positions. We sell and sell and sell and sell and exit our positions. Sell and sell and sell and exit. Sell and sell and sell, exit. Got to exit. If you don't exit, you don't make money. The banks have to make money. That's their job. So very nice looking long opportunity there on the pound odd. So yeah, lots of them. And obviously, as you can see, this is lit up a lot more. So the more extended you are on RSI, the stronger that sell move has been. The more people are sitting in profit, the more eager they're going to be to take it. The faster they're going to come out of those positions, the bigger the bounce back will be, which is elastic band theory, which is all explained in the bootcamp. Snapback. So that's a good one. Pound odd, long. I've got exposure already on the pound. I'm double exposed short, so I can't take that at the moment. But I'm exposed against the US dollar and the euro, so nothing to do with the Australian dollar. The only thing I've got on Aussie is obviously Aussie New Zealand. So I am on the Aussie New Zealand version. So that's all the RSIs covered. DAX isn't doing much. It's only going to be a 1-to-1, isn't it? I'll just try. I'm thinking of running some tests on the 1 minute chart. I hate running tests on 1 minute charts, but 1 minute breaks of the opening ranges, I get the feeling might actually be fairly good. what was it? It was 15,087. It's there. So taking the break on the 1 minute chart with a stop a few candles back, just to try and grab these little pop outs that we get. We get these a lot, where you get that initial flurry out of the opening range and before the pullback happens. Just trying to take a profit on those. The problem with that is, obviously, if you take your profit and it never gets back to your opening range, you never get back in again. So you miss our run days. But another version of the EA to be running basically with a different strategy. So I might put that on my list to test. But I've got something else I'm developing at the moment to do with sentiment. Speaking of sentiment, moving over to the sentiment dashboard, sentiment page on the website. Sentiment is pretty much the same as previous days. Nothing much has changed from retail. So retail positioning, they are still shorting the crap out of New Zealand dollar CAD. 1 minute chart. So this is where I started longing it, obviously, because the market was short. They are still not giving up. They are still short. So I'm expecting a rally again on this today. I don't, it does. I used to pay attention to retail sentiment years ago, and I developed a strategy for it and with a mate, and it worked really well. But it was based on the change in retail sentiment, which is why I've put together historical retail sentiment, so that we can see the change. And the idea was being, when you get that happen, that's the time you get in long. Yeah. When they start to come out of their longs, you go long. When they start to go in their longs, you go short. So those sorts of things, when you see that developing over a 4-hour period, that's when you hit the sell button like mad. That was the strategy we developed, and it worked really well, but it's labor intensive to trade. But looking at this again, now I've built this section of the site out, this New Zealand dollar CAD, they've been short on it literally for days. So all they've been doing is shorting this. They've seen a move come down, they've shorted it. And every time they short it, they get stopped out, and they short it again, they get stopped out, they short it, they get stopped out, short it, get stopped out, short it, get stopped out, short it, get stopped out. They're short it now. They're still short on this thing. Yeah, 92% of market participants are short. The liquidity is all there. The market knows exactly where that is. And it's just, when you see it plotted on a chart, the fact, and you think what you do as a retail trader before you know how the market works, you think it's so obvious. But we still do it over and over again, don't we? So yeah, New Zealand dollar CAD, another lovely long. I'm building. I'm not doing these trades. I am taking a couple of these trades, obviously. I am taking these trades, but I'm building out that retail historical retail sentiment section of the website, and I want to get a good month's worth of data in there so I can do some thorough back testing on this. But yeah, I mean, contrarian trading against the retail crowd is something I'm just going to start paying a lot more attention to. I'm building an EA basically that drags all this data into the EA and updates it on an hourly basis. And I'm going to set an EA up to basically just trade the opposite direction with position trading strategy. And I'm just going to let it run for a bit on a test account and see how it performs. But I'm pretty sure it will do quite well. So that's what I'm developing at the minute. Pound New Zealand is the other massive sell at the moment. Yeah. 90% of the market is long the Pound New Zealand. They are all pressing the buy button. What was I doing? Pressing the sell button. They're all pressing the buy button, getting stopped out. Not getting in there. You might get in there, but you got stopped out. Getting in there, getting stopped out. Getting in there, getting stopped out. Getting in there, getting stopped out. Getting in there. Where do you think that's going? Yeah. So for me, looking at the combined sentiment, which is what I'm focusing on these only, so the 6s and the -6s. The reason I prefer these is obviously because we've got commitment of traders on board, the big players who are moving this market, and the idiots, us, going the wrong way on it. So if these boys are all long and these boys are all short, giving me a +2, these are the ones I'm focusing on. So Euro Swiss, Euro Yen, New Zealand CAD, New Zealand Swiss, New Zealand Yen, and Pound New Zealand short. Everything else is not a max hit. So that's kind of why I'm the 6s and the -6s. If you filter it down to the intraday sentiment, 6s and -6s, you just literally position traded long or short based on that. I don't think you go far wrong. But this is long-term positioning, and these guys can be right as well. Yeah, but if you're in line with COT, and don't take stupid trades. If you see this saying long the crap out of it, and you look at Euro Swiss and it's going sideways, probably not good. If you see Euro Swiss has been going, has been massively short for a long time, probably not want to get in, because at some point, COT is going to actually have to start its move. It can't just steal their money all day long. It's got to some point start its move. And that's really what I'm using the historical sentiment for, is so that I can back test this a little bit better and see, there'll be a point. You can see here, US dollar Swiss. We had huge participation long. We were 94% of the market long on the 18th of January, which is here, back here. Yeah, they were all long here. So I shorted it. But there will become a point, right, when the move will go the way that it needs to. And when you look at the sentiment, what you find is that's when they are scaling out. They're giving up. So the market comes back the other way to try and entice them back in so that it can come and grab their money. So there will be periods where you will find this won't work for maybe 3 or 4 days, and you'll get into a squeeze on it. CAD Swiss, prime example. Yeah, I'm being squeezed on CAD Swiss. I'm pretty sure this is coming down because the sentiment's with me on it. But you'll get a point where you just it won't work because the market just has to breathe. So, will there be an API? No, there's no API. It's just pulling it from my data. But yeah, but you can go and get. You can get this data from an API if you want to. Scrape it off the site if you want to. It's all there. If you're clever enough to build a scraper to do that. I don't care. It's free. I'm not high, and it's not paying. It's not charging, is it? It's free. So, but I'm not programming for people. But yeah. So anyway, well, I do program for people, obviously, don't I? Because I create indicators. I'm just programming for people. So that's covered all of that. So your historical sentiment, your combined sentiment at the moment is giving opportunities. Pound New Zealand for shorts. So looking at Pound New Zealand, obviously those trades, that one's playing out. So you want to be going short on it, but do you want to be going short on it when RSI is down here, or would you rather go short on it when RSI is up there? Yeah, and that's what I'm building out the historical sentiment, because to try and filter out the points where you're going to get into the squeezes that way for 3 or 4 days before the market then continues where it should be going. We need a filter. So that's what I'm going to build the EA for, is to test different filters. So RSI is an obvious one to choose. And I'm thinking potentially 15-minute RSI is what you could use. So that would have been a short there. But hourly RSI, yeah. So what the banks need to do is entice these guys into the right direction. So they will have to give them something. They give them a bit of money. Yeah, we're going your way for a bit, and they're like, yeah, hey, let's just long the crap out of this and keep longing the crap out of this because we're winning. And then they will pull it back the other way and they go, oh, lost that one, let's try it again. Lost that one, let's try it again. And after a while of them taking all of their money, they have to give some of it back. Otherwise, you don't get anybody else to play with. Yeah, these guys will give up eventually. There's no liquidity now to hunt, so was no point. We need to go this way because they've got all the positions, haven't they? So I'm thinking that, and that's exactly where I got in. Yeah, on the hourly RSI, based on retail and COT position direction. COT is short, retail is long, therefore I want to be short. RSI extension to the upside, short it. Here, RSI to the upside, short it, add. So these were both, all these trades were taken off of that signal. And again, looking at Euro Swiss. Yeah. Obviously, you see what I've been doing, Euro Swiss. So I got in RSI extension on the hourly multiple times, waited for that COT positioning to drive with the retail sentiment in the direction that it was indicating to go. So do you want to long it here? So you're getting a long signal at the moment to go long Euro Swiss. But do you really want to be taking longs up at these highs? Possibly, possibly not. I'm thinking from a support resistance perspective, all we've got left is that. So yes, I could, but rather be getting in down here because I know that their liquidity is going to be sitting there because they're all short, aren't they? Retail. Euro Swiss, retail's short. 87% of the market is short on this thing at the moment. They've been getting killed for the last week. They're still doing it. So it's just trying to filter those out. But, you know, I mean, obviously I position trade is my bread and butter. This I see as a potential position trading tool, but on a much shorter term. You know, when I get into position trades, sometimes I'm holding for 2, 3, 4 weeks occasionally, aren't I? If I've got in too quick at the wrong spot, I have to wait. With this, I don't think you'd have to wait anything more than a week or two before you get your move starting in your direction. And you can start pulling some money out of that move. So that's kind of what I'm doing, but I need the data to back it up. Euro yen. So we've got Euro yen and New Zealand yen on the sentiment side as well. Again, Euro yen already gone, missed it. Do you really want to take it up here, all the way up there? Probably not. New Zealand dollar yen. I'm actually short on it because we're running into this resistance. And again, this is why I'm using a stop partially on it, because I know that the COT positioning is long on this pair. And I know retail is all short on this pair, which means it's likely to be hunting their liquidity, which will be an upward movement. So I'm shorting it against the current combined sentiment. So I'm using a stop because I don't like the trade idea from a fundamental and from a sentiment perspective, but I love it from a technical perspective. Technically, it looks great. Fundamentally and sentimentally, it looks awful. So I'll just risk a little bit on it, small risk trade. The other ones you've got are your New Zealand CAD and New Zealand Swiss. We've looked at New Zealand CAD. Yeah, so longing because they're shorting. But again, we've this one hasn't moved particularly well. But you know, if you'd have hit at any point on any day in the last 4 days, if you'd have hit the buy button when you got a reversal alert on a low time frame, yeah, at any point, it's down here when you got a reversal alert, you're out. At any point on this day, you got a reversal alert on a pullback, you'd have profited from it. Yeah. At any point on this day, you took a reverse alert in there or down here, you'd have profited from it. At any point on this day, you took a reverse alert down here, you'd have profited on it. Today, if you'd have taken a reverse alert, you're in profit on it at the moment. Yeah. So all this is saying is just don't take shorts. The chances are, even if it goes into an accumulation or we don't get that strong move and we get a slight move to the downside, the chances are, as long as market structure is playing out, you'll have a chance to get out. As long as you stay in line with where COT's going and the opposite way to what the retail sentiment's going, because we know that's where the liquidity is. At the moment, all the money is there and there, isn't it? So that's more than likely where the market is going to go. And New Zealand Swiss was the other one, wasn't it? Again, any reversal alert for the last 3 days you've taken long, like this one here. It's a terrible reversal alert, that one. It's very big. That's not even a reversal alert, is it? Oh, yeah, oh God, yeah, look at that wick. That's why. Look at the size of that wick. Yeah, well, that is a reversal alert because the market structure technically did not break till there, but could have got in there, but you wouldn't have got an alert on it. So, so even if you'd have taken that, we're in. But we've got market on our side. That's the thing. You're not getting it against market, so you're not going to get those entry immediate stop outs as much when you're going in line with the combined. So all good opportunities there. But as I say, this is all under development. This section of the site needs more testing. And obviously, when I get the data pulled into an EA, I'll be able to live test all of this and run it for a few weeks and see how it goes. I'm still deciding how to get into the market. What I will probably use, obviously, the reversal alert is the obvious choice to use, which is what I've been using with the I mean, you can trade this with the market reversal alerts EA right now. So literally, and that's what I've got running, which is why I'm taking these ones. Is all I'm doing is putting the market reversal alerts on these pairs and setting it to do H1M5 entries with position trading. And that's how all those trades have been taken. So, but I'm thinking of in the new version of the EA that is going to try and use this sentiment of just using price action rather than market reversal alerts. Because the problem with market reversal alerts is they're strong signals. As you can see here, we haven't had a structure break yet because the structure high before the low is there. So, it's not told you to go long yet, quite rightly, because there hasn't been a structure break. The problem with them, though, is they can trigger later. So the stronger the signal, the later it triggers. So using price action, like bullish engulfings, 3-bar reversals, I probably wouldn't use hammers and shooting stars, but multi-bar patterns, really. Fractals as well would be another good signal. So that will be a fractal. So fractals is probably something that's pretty good to use. Where's Bill gone? Where are you, Bill? Yeah, so fractal signals might be something that's good to use as well. So you'd have had a fractal long there. You'd have had a fractal long there. But as you can see, nowhere in there you've got a fractal long. I wouldn't set it to trade over those times of day anyway. So yeah, so I'm working on it when I get time. DAX is having a funny day today, not really going anywhere. news-wise, obviously, we've got the climate, which has been out at 9 o'clock, which is now, just literally coming out now, as expected. So I get the feeling we're probably waiting for the BOC today. So if we have a look through the pairs at the moment, we're not having a particularly exciting session in London, are we? Anywhere. Euro's just taken out the Asian low, but nothing much moving. So I think we're waiting for the BOC announcement later. But all these odds could well play out this morning ahead of that news. So yeah, it's dead, isn't it? We're within the Asian range. Everything's most pairs. The London session is within the Asian range at the moment. So we're an inside session, really. Oil yesterday, we got a down day yesterday on oil again. So I'm looking for this to pull back. I trouble with oil at the moment. I don't actually know where I'm looking for it to pull back. I'd love to see it double bottom. So an ADR hit today. This area here is where I would like to see it get. That is potentially where I might think about getting a long in, because from that level down to the low is about 2 ADR. So that 2 ADR move is really where I'm going to be very wrong, obviously, if we get all the way down there. So if that entry isn't right for a long to come and challenge these highs and then go for that new 4-hour high that we were looking at, which is here at 175 ADR. So that's where I'm looking for it to test next. That's the next resistance. If this level isn't the range low that we're going to bounce from, 150 ADR or there, yeah, is where I would look at being the next point where we should bounce. If we're going to get to this low, obviously there's a potential we're going to invalidate market structure long, and now it becomes a short again. So that's not really what I'm looking to happen. I'm looking for it to find support somewhere in this area to go long. So that area gives me like an entry, another entry half an ADR apart, and potentially another one somewhere around 2 ADR, 1 ADR on from there. So it'd be 1, 2, 3 entries, half an ADR apart. And then that gives me 1 ADR of breathing room down to here before I'm wrong. So that looks like a really nice trade area to get in. If it can get down there, I'm going to set an alert on that one. I'll get an I haven't got ADR monitoring that, have I? I don't think I have. I might add oil in there. Here we go. So adding oil in, just so I can keep an eye on that. Yeah, so I'm going to keep an eye on oil as well, potentially for an entry, but I'm not going to get in on this thing just for the sake of getting in on it. I still like it long, but I'm not just going to get in on that. That potentially is the pullback. Maybe. I just don't like the fact that we didn't make a new high. It's a double top, which means that we may be forming a range. And if we're going to form a range, I'll get in at the range low, but I don't want to get in on a pullback on that range in case what's happening is this is the resistance and we're going to put market structure in to make a new low. So I'd rather get in here. That's a much safer trade, I think. And if we get down to there today, based on where we are right now, extended on the hourly RSI, we're going to be very extended on the RSI, which means we've got a fast snapback coming. Morning, Tom. So I didn't see you there. You're late. Detention. So anybody got any other pairs they want to look at? I've covered everything I think I want to cover this morning. Nothing's moving anywhere at the minute. DAX is just flip-flopping. But obviously we'll see what happens with the DAX. Everything else is just sitting in where it is. So just waiting for things to move. CAD Swiss is my main problem at the minute. No, it's not a problem, but it's just my main drawdown protagonist, if you like. Why did I get into this CAD Swiss? Can anybody remember? Oh yes, that's because it's So this CAD Swiss again. So this is a kind of test. I was just trying to remember why I got into it, because I thought it was based on sentiment, and it is based on sentiment, but it isn't based on combined sentiment. It's based purely on, this is CAD Swiss here. Look, you can't see it. There's a glitch in this charting software. Look, if I do this, right, you see how it works, labeling everything, but depending on how wide your screen is, sometimes it misses some out. It's a glitch in the oops, this is called Apex charts. It's just a glitch in the chart, and I don't want to reduce the width of the chart like that, ideally, but that would make sense to do that. I suppose that's probably the solution, isn't it? But yeah, so that's CAD Swiss. So this is the reason I took this one on the CAD Swiss. Yeah, because we got 78% of market participants are long on this. So I'm focusing on retail, the biggest possible options on the retail side of things at the moment. So that's why I'm in that one. But again, I haven't got COT on side. There is no COT bias on CAD Swiss at all. It's neutral. And this is given the opportunity to push, you see. So this is why I think having COT on your side as well is an advantage. I got in on the RSI extension there. So that's my first entry on the RSI extension. Second entry was there. As you can see, third entry was here. Fourth entry up here. So I'm 4 short on that. So trading against retail basically, but I've got obviously it is a bear trend at the moment, and market structure, we've had a market structure shift here. We've put in a double bottom or triple bottom in this case, and we're bouncing back. So that's the area I've looked for not being invalidated, obviously. Double topped here. So that's what I'm looking for to be the lower high. And now putting in a lower low, or at least attempting a double bottom. Clearer to see obviously here, so you stick your fib on. Yeah, this is a 61.8 retracement. What's my view on gold? I don't trade gold. Excuse me. From a sentiment perspective, gold is 79% of the market is short on gold at the moment. So gold has been going up. It's brilliant. I love sentiment. Just to laugh at everybody. You're going the wrong way. So yes, gold is a long, obviously, as you can see, it's a huge long. But the reason for this is mainly US dollar weakness. So gold moves on its own to a certain extent, but it is also driven an awful lot by the US dollar being a US dollar cross. So if you look at, however, other US dollars, like US dollar CAD, US dollar Swiss, and US dollar yen, you can see obviously gold does have its own strength. It's not just a US dollar cross, but it is a US dollar cross. So when you're looking at this, you need to obviously pay attention to what's coming up from a US dollar news perspective, because that will affect the gold price. But yeah, gold is along at the moment. Retail has been shorting the crap out of it for quite a while. So I'm not storing that, actually. I'm not storing historical gold retail sentiment. I'll have to start doing that, I guess. So yeah, I'd be looking for longs on it, really. So where we are at the moment on the 4 hour, obviously you just come off the highs. Depends. I mean, obviously, me personally, I will not take a trade unless we've got at least an hourly RSI extension or a 4 hourly RSI extension to the downside, because if I'm going to get in on something, it needs to have pulled back significantly for me to actually want to enter. So there's no entry for me on it at the moment. But you know, hourly M5, you got a reversal out of propulsion, although that's more of a V-shaped recovery again rather than a propulsion gap. There's not really an accumulation there, is there? However, there was a large amount of buying which has been added to, but I would say that is more of a algorithmic profit take, V-shaped recovery. Yeah, remember what I said earlier about how the market works. A price discovery move, whether it be based off of news or anything that fails, becomes an A-shaped recovery, or depending if it's price discovery to the downside, becomes a V-shaped recovery. Yeah, if you get a piece of news where market participants jump on board with the direction, you get more of an accumulation push, which becomes a flag. Yeah, and you get a propulsion gap. So the next time market comes back to this area, the participants that decided, yes, we do like it, will go, we still like it, which is why you get propulsion gap bounces. Again, they play out on all time frames in the same way. Look. So gold, I would only be looking for longs on it personally, just because I just don't want to get on board with these guys because they're wrong all the time. But I haven't got any signals to get in. It's not strong enough in either direction at the moment. You're accumulating. You're on day 4 of an accumulation. So unless anything happens with the US dollar dramatically to make it bullish, I would say look for long opportunities, however you're going to get in. Market reversal alerts to the upside obviously are an easy one, or M15 if you want to be slower. You haven't got one because it's not, you know, you won't get reversal alerts in accumulations until you've been accumulating for a while. Then it will start to go, right, well, we're too tight. At some point you got to get in this thing, and then it will start to give you support rectangles to break. It won't do it while we're just sort of sideways like this on these sorts of time frames. David, I'm really enjoying pulling in a bias of 2 and -2 on the retail sentiment and waiting on price to be at a good area to take a reversal. Yeah, it is good. I like. That's the filter to use, I think. I just want all the strong stuff. To become a 2, it needs to be 75 or 25, basically. So if you think of it from an RSI perspective, it's the same sort of thing. Yeah, that is where and that is where we're picking the extremes. Yeah, so they are extremely short on New Zealand dollar CAD. So they are extremely wrong on that, which means we give it a high score. Higher the score, the better. Pound New Zealand, they're extremely long on it at the moment. They're extremely long on it. Couldn't be more long, could they? That should be the new saying, shouldn't it? They couldn't be more long. They couldn't be more wrong. But you've had a reversal alert on the hourly, which seems to be holding up. But this is the thing that with retail sentiment, and with any sentiment, with COT as well, and this is why I've used COT for so many years. It's the path of least resistance. A lot of people you hear saying, in groups and things, and I've said it many times in the past. Why is it when I get into a trade, it takes ages, but when I'm wrong, it's wrong very, very quickly? Yeah. The reason is because you're usually trading against a force, and whether that be COT, whether it be retail, whether it be the trend, whatever that force may be, the reason you hit the long button and it goes a little bit long and you go, excellent, move to break even, oh, stopped out, and then goes down, or you get stopped out completely, is because the force is the opposite direction, whether that be the trend, retail sentiment, whatever. When you get on board with the force, your trades go like that. You're in and out, and suddenly it's like, oh, that's quick. And what normally happens is you get out and then it goes like that, and you're like, oh, missed it. And that's what I talk about in the bootcamp. If you get onto a position that works and you exit that position and then it goes 3 times further, that makes you crosser than it does if you got stopped out on the thing a lot of the time. You've got to get rid of that. That's just nothing you can do. A move will be that. Look at what I took out of it. Yeah. You take a piece of the meat, not all of the meat. That was drummed into me by one of my mentors. He said, you're never, ever going to catch the top and the bottom of the move. If you can catch a third of it, job done. That's all you need, a third. If you can catch a third of every move you find, you're going to make money. If you can catch half of it or 3/4 of it, you're fantastic. But you're not going to do that every time. If you can catch some of it, that's all you need, isn't it? Look at what's happening here with the pound New Zealand. Yeah, it's pushing up, but look at the resistance we've got. Look at the wicks. This thing's like trying hard to push in that direction, but why is it struggling? Because the market knows all the liquidities in this area, so it's trying to get to it all the time. It's trying to fill its orders, and there's no orders this way to do it because everybody's short on it. Everybody's long on it, rather, which means that there's no liquidity here. All you're going to be able to hoover up at these highs is limit orders to go short, because that's what everyone's doing. They're going, other way around, isn't it? They're going long. So it's the inverse. Wherever those orders are placed is where the market is always going to want to head. But it's going to get to a point where, and that's the thing, it doesn't give you sentiment, and which is why I think you've got to be careful with this. It doesn't give you the amounts here, right? 90% of free traders is, well, let's not do that. Let's say we've got 10 traders, make the math easy. 90% of this is 9 traders, right? So that's not a lot, is it? So if the market has only got 9 traders to go and grab money from, it's going to go, well, it's not going to work anymore, is it? So we'll go long, and we'll start to get more people on board. And then this 90% will become 100 traders long, and then it'll become 1,000 traders long. And then it will become a point where there's so much liquidity in the other direction, the market can't resist it. And that's when the sentiment kicks in the other direction. And people go, well, I've been wrong on this, right on this a couple of times. This pound New Zealand is a really good trade. They'll keep doing the same thing over and over again. And this is I can't remember who it was, one of the philosophers or someone said, the definition of stupidity is doing the same thing over and over again and being proved wrong over and over again. A clever person will do something and get it wrong, have another go and get it wrong, and then go, that's not the way to do it, and do that. The definition of stupidity is the retail crowd. 80% lose money on a regular basis. We know they're wrong. That's the whole premise of sentiment trading, isn't it? It's the stupidity factor. You know, this has been, pound New Zealand has been a short for ages. Yeah, they've been long on this since the 20th. And they've been getting longer and longer and longer and longer on this. The 20th here. Yeah, they remember they were short and they went long. It's just, you know, you're never going. It's never going to work. Nothing is ever 100%. You're going to get times where that isn't going to work for you. So this is why this, I think, is much more important. Which is why I built this section of the site, because I think it's more important to pay attention to that in line with the big boys. I want these guys on side with me. But you can't just go, oh, that's a 6, I'll hit the button. You've got to wait for a setup. You need something to get you into the market. So on this, if I'm going to short it, I need there to be a pullback or a failed breakout in this case. That's where I'm going to get in, because on a breakout of that strength, when you get an RSI extension to that level, you know that one of two things is going to happen. It's either going to come back and retest resistance and bounce from it, or it's going to be wrong and be a false breakout and break back into the balance, into the range. At the moment, we're in a price discovery breakout to the downside. Yeah. So you've got to wait for a condition. So these are the way I see this working is I need to pay attention to this lot, only these. But if I get no signal to get in, if I don't get a reversal alert on these, I don't get in. I'm waiting for a condition to appear. So this is another condition indicator, like the RSI, like ADR. It's just a condition in the market. The condition is long. It's above the moving average, below the moving average. It's that sort of indication. You can't rely on it alone. You have to have a signal to get in. And in this case, obviously, it was reverse alert. But it's, you know, it's in development. We will monitor it and watch it. DAX is in profit. ORB is working nicely today. So DAX, from a downside perspective, we were targeting yesterday's low, and after that, this level here, which was 125. Oh, what was that level there? Sorry. Last week's low. Yes, that's last week's low. So we got yesterday's low and last week's low. Oh no, what is that level? Sorry, that's the wrong line, isn't it? That one. That's rubbish. Get rid of that line. Yeah, so last week's low is 125 ADR. So those are our targets today on the DAX for the downside. So I will be seeing how much profit I've got when I get there, and then obviously make a decision if we get there. At the moment, we are just hovering around here. All this data here is not real data. This is broker data. The market's closed. That is really where we're headed. But retail will be seeing this and using it, unfortunately. But obviously, the futures markets won't be. So I've got trailer on. No, I haven't got trailer on this one, have I yet? I'm not 400 in profit yet. Not far off. So basically, the way I've got my EA up set up at the moment is I'm going to start trailing tight when I get to 40 points in profit. So this position needs to be kind of down here When we close down here, then I will tighten up a trailer and lock in all that profit. And obviously, as soon as we break out of there, hopefully we'll get that flushed down into yesterday's low. Tricky one today, though. Not particularly strong, is it? Right, that's all I've got for you this morning. So I'm just going to babysit these positions today. I don't think there's a lot going to happen in the FX world at the moment. Certainly doesn't seem to be much happening. New Zealand on the yen's gone into profit. Just. Aussie, New Zealand's flip-flopping. Everything else is just flip-flopping around. So I think DAX is really the only opportunity I've got to make any money this morning. Everything else, I think we've got to wait for the Canadian dollar announcement later at 3 o'clock. So this is coming half an hour after New York Open. So I'll be online for this when this is released, and we'll watch what happens with that. I've got CAD exposure short. So as long as I don't put the interest rates up, I'll be all right. But quite often when we get news as expected, we do get a pop on the expected news as well. But this is really what I think we're waiting for today, the press conference. So I wouldn't be surprised if what we get on the CAD today is something like that. So we'll spike up and then we'll fade it in an hour, and then we'll be ready for the real announcement to come through. Okay, so have a good morning. I'll be back this afternoon at 2:20 UK, 10 minutes before New York Open, basically. And then we'll trade the NASDAQ, see where we go from there. If you need anything, I will be in the Telegram group as usual. But other than that, hopefully see you this afternoon and have a good morning.